Hello there. Good morning, good afternoon, good night, depending on which part you're watching this from. And this one is about pensioners. And of course, I've got to talk about it because I come within that bracket. So I headed it, Will pensioners pay tax on their pension? Because that was the headlines I noticed yesterday, but I decided, well, I could only do it today anyway. But there's been another announcement from the Treasury that caught my attention and probably the attention of millions of pensioners. And at first glance, it sounds like reassuring news. The Treasury has confirmed that it is committed to make sure pensioners whose only income is state pension will not have to pay income tax. Now, if you're thinking, isn't that already how it works? You're not alone. A lot of people have been scratching their heads over this announcement because the reality is a little bit more complicated than the headline suggests. So let's unpack it. At the moment, everyone has a personal allowance. This is the amount of income tax you earn each year before you start paying income tax. The problem is that the personal allowance has been frozen for several years, while the state pension has continued to rise under the triple lock. The triple lock means that the state pension increases each year by whichever is highest: inflation, average earnings growth, or 2.5%. As pensions rise, but the tax-free allowance stays the same, the two figures begin to move closer together. If nothing changes, experts estimate that from next year, around 82,000 pensioners could find themselves paying income tax on their state pension for the first time. And this has led to an understandable concern. Many pensioners feel they've paid tax throughout their working lives, and the thought of paying tax on the pension they've worked for seems difficult to accept. So, the Treasury has now stepped in to say that it intends to prevent that from happening for people whose only income is their state pension. The obvious question is how. The most likely answer is that the government would increase the personal allowance or introduce another mechanism that keeps the state pension below the level at which income tax begins. In other words, if the tax-free allowance rises alongside the state pension, pensioners who rely solely on their state pension would continue paying no income tax. But this is where many people could become confused, because this announcement does not mean that every pensioner will stop paying tax. In fact, if you're in a situation like mine, you'll probably be asking exactly the same question I asked when I first read the story. I receive my pension, but I also continue to work. Because I have two sources of income, my total income already exceeds my personal allowance, so I'm already paying income tax on it. And that isn't changing. So, what is actually different? The difference is that this announcement is aimed specifically at people whose only income is their state pension. If your only income is your state pension, the government is saying it wants to make sure you don't get dragged into paying income tax simply because the pension has increased while the personal allowance has remained frozen. But if, like many older people today, you receive a state pension and continue working, or you have a workplace pension, a private pension, a rental income, or other taxable income, you'll still pay tax in exactly the same way you do now if your total income exceeds personal allowance. So this isn't a tax cut for all pensioners, nor is it a promise that pension income will never be taxed. It's a commitment to stop people who rely only on the state pension from becoming taxpayers purely because of the way the tax thresholds have become frozen. And that raises another interesting point. We're seeing more people working beyond state pension age than ever before. Some continue because they enjoy their jobs, others want to stay active, but many continue because they simply cannot afford to retire completely. Rising household bills, housing costs, and the general cost of living mean that retirement today often looks very different from what previous generations expected. For those people paying tax, it isn't new. It's already a part of their everyday life. So while today's announcement will be welcomed by many pensioners who depend solely on the state pension, it won't make much of a difference to those who already have additional income. Another question is what this means for the public finances. Raising the personal allowance could reduce the amount of tax the government collects. That may be popular with pensioners, but it also means less revenues for funding public services unless that shortfall is made up elsewhere. As with so many budget decisions, every choice comes with a cost. Ultimately, this story highlights the challenge facing any government. How do you protect pensioners from being taxed simply because their pension has increased to keep pace with inflation while also maintaining a tax system that raises enough money to pay for the NHS, schools, defence, and other public services? There are no easy answers. What today's announcement does tell us is that the government recognises there is a growing problem if the state pension continues to rise while tax thresholds remain frozen. So they need to really do something about the tax threshold because it simply isn't enough. For pensioners who depend solely on their state pension, this could provide some reassurance. For those of us who are still working while receiving pension, however, very little changes. We will continue paying income tax on our combined income where it exceeds the personal allowance, just as we do now, and as I've said before in this news item. So perhaps the bigger question isn't whether pensioners should pay tax. Perhaps it's whether the tax system is keeping pace with the realities of modern retirement, where increasing numbers of people are working well beyond pension age simply to maintain their standard of living. I'd be interested to hear your thoughts. Do you think the government should raise the personal allowance to keep state pension only recipients out of income tax? And should working pensioners receive any additional tax relief? Or should everyone continue to be taxed under the same rules? Let us know what you think in the comments. And that's all I've got to say for now. Bye-bye.